My channel, I'm Doris. I'm here to show you about my stock account. Today we're going to talk about the market news and how LVMH is probably overtaking Tesla. LV's parent luxury goods giant Louis Vuitton Group is setting milestone for a listed European company with a market value of over $500 billion as of the close of trading on April 28th local time. The total market of LVMH on the OTC market is just one step away from surpassing Tesla. As of Friday's close, LVMH, listed on the Paris Stock Exchange, was trading at €871, with a total market value of €436.44 billion. Just earlier this week, the stock briefly stood at the €900 mark. LVMH, which trades on the OTC market, also did well, closing at 960.8 on Friday, with a market value of $483 billion. On April 21st, the stock briefly hit the $1,000 mark, a new record with a total market value of over $500 billion. As of present, the top 10 stocks in the U.S. stock market are tech stocks, with a total of $2.68 trillion, including Microsoft, Google, Amazon, Meta, and other technology giants, according to Friday's closing data. LVMH's total market capitalization have surpassed Xenon Mobile, ranking among the top 10 U.S. stock market capitalization, just a step away from Tesla. In fact, earlier this week, LVMH briefly surpassed Tesla in total market capitalization. The luxury giant's stock has risen more than 30% this year, raising its market value to about $500 billion. Tesla has experienced a stunning drop of more than 60% in 2022, with its market value falling from $1 trillion mark. And in the earlier quarterly report, the impact of the global price reduction strategy on Tesla's profitability emerged, and Tesla's share fell 20.8% in April. The heads of the two companies have also switched places on the world's rich list. According to Forbes magazine, Bernard Arnault became the richest man in the world this year, with a personal wealth about $211 billion, according to the 2023 Global Billionaires list released on its website on April 4th. Tesla CEO Elon Musk jumped to second place, worth about $180 billion. Amazon founder Jeff Bezos was in third place. First quarter results exceeded expectations. The Chinese market had boosted performance growth. According to the public data, LVMH Group owns 75 outstanding brands designing high-quality products, and is the only group covering the 5 major sectors of the luxury industry: wine and spirits, fashion and leather goods, perfume and cosmetics, watches and jewelry, and high-end retail. In mid-April, LVMH reported the first quarter revenue of €21.04 billion, up 17% year-on-year, almost double market expectations. Sales of fashion ups and leather goods rose 18% year-on-year, the highest of all categories, and liquor, except wine and liquor, recorded double-digit percentage growth. In particular, the company said the rise was due to a rebound in the Chinese demand, stable U.S. sales, and a rebound in the Japanese market. From the regional perspective, thanks to the strong demand of local customers and international tourists, Europe and Japan showed a strong growth momentum, with 14% growth except France. Asia, other than Japan, achieved a significant rebound in optimized epidemic prevention and control measures, with the sales increasing 14% year-on-year, while the United States was stable and continued to increase by 8%. LVMH Chief Financial Officer Jean-Jacques Guillaume said the fashion and leather goods division saw double-digit percentage growth in China and was the main driver of its sales growth. China accounts for about 80% of the group's operations in Asia, and the company's statement said LVMH said it was very optimistic about the Chinese market in 2023, with first quarter figures indicating good prospects for the rest of the year. The pricing power of the luxury goods industry is prominent. Unlike tech stocks over the past 3 years, the luxury industry, like LVMH, where its total market capitalization is more than twice as high as 3 years ago. The pandemic had further highlighted the luxury goods industry's absolute power over the pricing power. 2 days after LVMH's results, Hermes, another luxury goods giant, also reported better than expected results, rising 23% from a year earlier to 338 billion euros, further reflecting the growth of a luxury industry. The market view is that European luxury companies such as LVMH, Kering, and Hermes Internationals can keep growing even as the volatile macro environment continues, and that the LVMH and its French luxury competitors will affect the European stock market as much as big technologies companies affect the US. The rally of the luxury giants has further consolidated Paris's position. As Europe's largest stock market, Paris's CAC 40 index is set a record, up 15.72% this year, outpacing other major European markets. UBS Wealth Management's Office of Investment Director previously said that despite the uncertain U.S. interest rate outlook, European consumer-related sectors are expected to benefit from an inflection point, with Chinese consumer providing a significant support for European consumer stocks. European stocks have second exposure to China, with 8% of sales coming from China. Even for more European luxury brands, they should benefit from the return of Chinese travelers to Europe. Before the outbreak, Chinese consumers accounted for a third of global sales of luxury brands. Is America's banking crisis not over yet? Deposit fled again last week. In the week ended April 19th, excluding deposits in U.S. banks fell sharply again, tumbling $10.4 billion to its lowest level since April 2021. But the decline was narrower than last week. It was worth noting that the impact of First Republic Bank this week has not been reflected in the deposit data. As the net inflows from money market funds increase, some analysts believe that the outflow of U.S. deposits is likely to be larger this week. This week, First Republic Bank was again in the spotlight. The Federal Deposit Insurance Corporation will prepare to immediately include the First Republic on its custody list. Conditions at the regional banks have deteriorated and have no more time to secure rescue through the private sector. In the week ended April 19th, the total commercial bank deposit rose $21 billion in a week. Yesterday's report showed that the Fed's balance sheet shrank, but use of bank bailout instruments rose. However, the decline fell sharply again, dropping $10.4 billion to its lowest level since April 2021, but the decline was narrower than last week. On a non-seasonal adjusted basis, U.S. commercial bank deposits, excluding large time deposits, fell by $174 billion, also to the lowest level since April 2021. Thursday's data shows strong inflows of money market funds, which also suggested a continued outflow of commercial bank deposits. However, the deposit change data is 1 week behind the Fed's balance sheet and money market funds changes. In the U.S., the total deposit outflow may be driven by corporate tax demand. Last week, both large and U.S. stock banks saw outflows, while the foreign banks saw inflows. Small banks had the largest capital outflow at $7.94 billion, large banks at $2.43 billion, and foreign banks at $728 million. On the other hand, commercial bank loans increased by $15.08 billion in the latest week after a seasonally adjusted increase of $13.8 billion in the previous week. On an unadjusted basis, loans increased by $20.9 billion per 2 weeks after the loan squeeze. Among them, small banks' loan growth slowed significantly to just $4.04 billion, while the big bank loan growth accelerated again. It is worth noting that the impact of the First Republic Bank this week has not yet been reflected in the deposit data. As the net inflow from the money market funds increased, some analysts believe that the outflow of the U.S. deposits is likely to be larger this week. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.